BTCCryptoAnalysis.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Actually, I've been noticing I watch these videos afterward, and it turns out that the intro that we did is all the welcome to the Daily Brief, so I don't really need to do that multiple times. Anyway, good morning, everyone. I think there's anyway, it doesn't matter. Actually, well, look at that. We got a fairly full room here in the Zoom call here this morning. Quite a few people there. So anyway, hello, everyone. Here we are. Where are we? 14th of May. 9 o'clock on the West Coast, I guess noon back east, early evening over there in Europe. Today is Tuesday. Of course, Tuesday is Pentecook Day, which means that we have TRI CTO Sjord on the call for the after party, talking about his awesome crypto investments and his blossoming website. I have to say, wow, he's put his heart and soul into this thing. So, and it shows. He's trying very, very trying very hard to bring this thing to fruition. So, we'll have an interesting, fun report with Sjord on Tuesdays. Always a fun day. Talk about crypto. And if there's any time after he has done his presentation, we can always circle back and look at some interesting data, like I said, off of the weekly commodity trend survey. And it would make sense because, sell in May and walk away. They knocked this whole crypto market down. And I do think that there's actually quite a few names that are starting to come into very attractive trade locations. And there are a few names that are still trending higher that have come down into trade locations. So, if anything, now is the time to pay attention. Probably a really good example of that is actually what I've been doing here in this funny meme stock kind of world, where if you can just force yourself to come in at the bottom ends of ranges. I don't know whether this is the best chart to show you, but this is what I've been doing here this morning. And actually, here's one that I forgot to work more sell orders. Look at that. A really nice double yesterday, but I didn't even think to put more sell orders working. What a knucklehead. Doubles here for you guys, but I kind of dropped the ball on that. But nonetheless, I'll probably see a bit of volatility. I think, if I'm not mistaken, NVIDIA's coming out with earnings here on the 22nd. So that'll be in a week. I'm sure there'll be lots of volatility in here. But I suppose the story du jour continues to be, and as you can see in our lower right-hand corner, maybe we'll talk about it when we get to it, but where's our little GME? It went absolutely crazy again. And of course, got off a big win there. So like I said, at the end of the video here, maybe we'll circle back around, take a look at what happened there. Anyway, more just ridiculously huge wins here. So anyway, nice day profit-wise, and a little funding account. We're back up around $1,300. We were funded with $500 to start this adventure off. So I think we're heading in the right direction. But we got to get to the first things first. And if anything, this is the reason why I have the menu. That little summary menu there on the YouTube page, because Brian's got to try and stay focused and see if we can be a little bit more consistent with the delivery. Although when I look at the YouTube page, geez, it looks awfully blurry. Why on earth is that the case? I can't even read what that says. It's set at 144p. That's a little ridiculous. How the hell am I supposed to see what the heck's going on? Hey, there we go. Okay. First things first, let's take a look at the breadth. And as we said, we have Mr. CTO on the call today. So by all means, if you have questions about anything that you see on the screen here, specifically with number crunching, pop on the after party and ask. That's why Sjord's here. Market, stock market in general, I like to follow the S&P 500. I think it's a pretty good proxy. We could ultimately do a universe breadth. We did try to do that before, but maybe biting off a little bit more than we can chew. Maybe we'll if we can get to the point years down the road, maybe we'll create things like universes and stuff to follow. But as it is right now, just following the S&P 500. And fast actually is coming off here a bit, and the slow is actually working its way up. Almost got into overbought territory there. I suppose for the purposes of this conversation, we can take a look at sort of what the internals of the breadth engine are looking like here right now. I do need to update this list, so that's a little bit dated, but nonetheless, let's just take a quick boo. There is the Dow Industrial, same sort of thing as the S&P 500. Transports actually working its way up, but you can see fast is breaking down, probably a function of energy prices so high. Utilities are actually got egregiously overbought. So we're probably going to see a bit of weakness out of the utility sector. The sector funds, this gets a little bothersome when the entire market is all parked in overbought zone here. And these are all the sector ETFs. So that's a little bit concerning. Commodities on balance. We are living in a fairly inflationary world, so not a big surprise. I think a lot of the inflation that we've seen over the past 6-8 months is just purely a function of rising energy prices. And of course, when we get to the Econs du jour, you will see that we certainly haven't put that genie back in the bottle yet. Bonds themselves probably on that negative print on the PPI today. Not going to be helped with what we're seeing breadth-wise. It looks like the bonds actually broke down a couple of days ago, maybe even a week ago. So that'll be interesting to see how that develops. We'll see if there's any tops that come in on the stocks. And we're probably going to find that the stock market actually moves very closely with the bond market because, of course, the market is very stressed about interest rates right now and this whole inflation problem. And interesting enough, stock 600 turns out that this is a tougher nut to crack than we thought. So we're still having some difficulties working with this, but of course, Siord will talk about that in the after party. And then Toronto kind of lagging behind. Not really overly impressed with Toronto. Actually, you know what? Remember, Siord, we had that anomaly on the S&P 500. It looks like we have the same anomaly on the TSX. I don't know whether you want to look at that later on or not, or maybe I'll post that in the development room. All right, cool to see. And then, looking at crypto breadth, it's not overly compelling. If anything, these images look almost identical. So it is kind of interesting how the crypto universe actually looks a little more choppy. This looks a little more refined, but nonetheless, very similar messages there. I don't know how our crypto universe breadth indicator has been built out here, how far along we are. But maybe we'll touch base with Stuart on that in the after party when we have him. Interesting to see, probably Mr. CTO. Would you say, Stuart, maybe just give a shout out to these public people? Would you consider Render sort of your number one pick in crypto?
Well, this cycle is not disappointing. Let's put it that way.
That's a very diplomatic answer. But I would say absolutely the number one pick out of our CTO that's totally kicked butt is this Render. Pull up the price chart. I won't even show you here. But Sierra's got us long from underneath $1. So it just tells you what an awesome analyst Sierra is. Interesting to see how the old corn is actually trying to pop up on this leaderboard list. That's a bit of a surprise. So breadth-wise, things look like they're still pointing up. We haven't broken in earnest here yet. But considering the fact that we do have some markets that are, especially this sector ETF, I do not like the look of that. And we do have things like the bonds already rolling over and the S&P and technically the Dow rolled over. It's going to be a bit of a tough market, I think. Sell in May and walk away. What a big surprise. I mean, actually everything here marching along this seasonal window has actually been pretty cliche as if you want to ask me. But anyway, that's that. Okay, so there's our sort of bread summary for the day. Next up on the hit list, the Econs. What the heck happened today, news-wise? And this is like economic news. Headlines are, it should be pretty obvious. U.S. producer prices rise more than expected, and they came in a lot more than expected. I'm actually a little surprised to see that the stock indexes are as firm as they are. They really puked out on this news announcement and then just sort of turned on a dime and went screaming right back up. And actually, here's the headline: U.S. stocks lack direction. Well, I would say that it's not a bad summary. We just looked at the breadth indicator. There's nothing really to get excited about there. We got to look at things like the S&P 500 futures. We've been talking about this for a bit now, so I don't think it's really shocking. Here we are playing with good old Brian's line in the sand. Brian's favorite fib, whatever you want to call it, 52.54. You can see how the market's just kind of back and forth, right on this level. I'm actually a little surprised that we haven't traded up to these Foggenbaum levels, especially Wicks and Dales like to be eaten. A little surprised about that. We had earlier today, we had a very, very screwy market open. I mean, it was all over the place. When we were sitting in the day trader room, guys were, I want to do something, but this is just an absolute mess. So unfortunately, really couldn't do much here on the open today. As I had said, on that econ, the market absolutely puked out. And then, like at about 6 a.m., we had Fed speakers start blabbing away. I've said repeatedly, I think they're talking way too much. I don't think they're doing the public a service with all this. They're always wrong. They're bureaucratic. They're late. They always look at backwards. I mean, they got that whole inflation thing through the whole COVID thing completely wrong. And the worst part about all of this is that nobody holds any of these people to account. It's like they're like bulletproof or something like that. It doesn't matter what they do or what they say. They can be completely and utterly wrong. They'll never get fired. So, a little disappointing and all that. So they've decided in their great wisdom that the public needs more of their confusion in our lives. And so as a result, what happens? Just an absolute mess. And I actually heard one floor trader the other day say it, and frankly speaking, I think I have to agree with him, is you think you're trading against other humans now? You're not. You're trading against algorithms. And if you're a day trader, I mean, half of our job is we have to look at something like this and go, you know what? Probably best just to leave it alone. There aren't any setups that are really setting up here. If anything, after the whole fact. And this is also a great commentary on why we should not be trading around these Fed speakers. I think that this market wants to go down. I mean, you looked at the breadth indicators. There's nothing really overly bullish about that. Why did the market like puke out and then all of a sudden just higher here? There weren't any other econs out today. There were two Fed speakers. So in that kind of environment, a lot of the prop traders, you're not even allowed to have positions on while Jerry is speaking. And man, I know guys like Hogue, they'll run around, freaking out if you have positions on as we come into those kind of events. And I think that the algorithms just took over this morning and it was just an absolute mess. And also the same thing in crude. I mean, crude was just an absolute mess. I was kind of thinking, Mr. ICT, kind of love his setup. I would have liked to have taken a short in this reload short zone. I had really nice market structure. You can see yesterday through the day, I was thinking, where is the top? Through the retail session, we didn't even get anything to work with. Probably the actual best trade setup was at 3 o'clock in the morning, my time. Great, wonderful. Market absolutely puked out, broke previous structure. Actually, I think I have that over. I mean, look at this 4-hour chart. V bottom, V top. We know that V bottoms and V tops like to be tested. So what ends up happening? Scream straight down, V bottom. All right, scream straight up. Beautiful little top up in here. And this was basically, through, I guess, late yesterday. Then we opened up, absolutely puked right out, ran the stops of the lows. And then, like I said, they just brought the whole market back. When those Fed speakers start speaking, all the human traders are all like, I got to get out of here. Just, let's hop on the sidelines. And the algos just go and mess around with this thing. And here we are right back down where that sort of initial PPI print is. And frankly speaking, I think you're going to see the same thing out of the stock market. The breadth indicators, all right, looking very happy right now. The econs themselves, which is what I was supposed to be talking about here, they don't look very happy. We are technically in a reload short zone. It's just a question of what is it going to take for this thing to actually break. And I think the big catalyst that's, is probably going to be a catalyst for the week. Keep in mind, a lot of times in the market itself sets up for like Tuesday, Wednesday to be the big catalyst. And tomorrow, I think we had told you this also earlier on in the week and through the broiler chicken show and all that kind of stuff. I think we have big inflation data coming out. We'll just say inflation report coming out tomorrow. And I get the impression that the whole market is setting up for whatever that ugly, might be pretty. I'll tell you, the econs that came out today, they were not pretty at all. And actually, this is like accelerating. Like previous was okay. Producer prices are calming down. It looks like we got in front of the inflation problem. Okay, we were looking for a little bit of an uptick here this month, and the number just blew away. Even the estimates, right? I mean, this is like twice that number. And also, too, the Fedsters, they love this core number, which excludes volatile fluid and energy, which I think is just a load of horse hockey. But anyway, you can see market was looking for a relatively soft number. Boom, just completely blew it away. And then, like I said, to actually do any trading today, these two jerks here completely messed the market up. So couldn't really do anything setup wise. I was really close on crude. I'll tell you that much by crackers. It was a little bit of a bummer. But we're running out of time. So maybe I'll look at that in the after party if you really want me to. Okay, so we looked at ES a little bit. We looked at crude a little bit. Interesting to see the dollar is not really overly happy here, which is interesting because I think we're having now a combination of, well, we've got weak econs and weak consumer. Consumer's not really happy. I'm not quite sure where the hell Jerry gets is there is no inflation. That PPI number today was damn inflationary. 5% producer price increase annual basis at 0.5 month over month. That's an ugly number. So I'm not sure where he gets that. And the consumer confidence number on Friday was an absolute train wreck. So I don't know. If anything, I would have to argue. I'm sorry, Mr. Powell. We have stagnant economy and we have inflation. So you are a lawyer by trade. Great. You're awesome at arguing. And, I can see, by your behavior that you are a really good lawyer. I don't think you're a very good economist. Sorry. Anyway, that's here nor there. So US dollar is melting down. Actually, a lot of people are talking about, the collapsing value of the US dollar. Biden he's still on his orgy of spending, just absolutely insane government spending out of the States. Same thing in my country. It's almost like there's a concerted effort to destroy these Western nations. Anyway, that's what it is. So not getting any help out of the US dollar here today, which is interesting because in times past, when you would see a softer US dollar, you'd actually see a relatively happy risk market. I suppose finish off this conversation, take a look at old corn. In a weird sort of way, I think the corn and actually US dollar are highly correlated, but we'll see what happens going forward. I had talked to you guys recently that if this thing was a bull, then we would probably see the market try and set up some sort of W kind of action through the bot trade level, which happens to be the midpoint of this channel, which would point to some sort of test of these highs. And unfortunately, this is a scenario where this is a bear, big smiles. This is a bear until it isn't. The market actually has to prove to us that it is a bull before we can actually get like uber bullish again. That means we got to see some W's on the price charts. Was interesting how yesterday in that sort of news vacuum, and we saw this also on Thursday. Remember Thursday we had a nice little uptick in the market. Then Friday comes along, consumer numbers, actual econs come out, and the market just tanks. Then we had a quiet weekend. Things look relatively calm. Price get bid up. We have econs, producer prices now. Horrible number. Market gets slammed. I think for all intents and purposes, we're basically stuck in a trading range for the time being. And I think this market, just like every other market, is waiting on that inflation number tomorrow. So I can't really say that this is overly bullish or overly bearish. We are working a topping pattern. The moving averages are bearish. So I think it's incumbent on the market to prove to us that it is a bull before we actually start getting uber bullish. Any difference in the altcoin market? The juniors, this is the total. It's exactly the same image. I mean, like literally identical. So again, in fact, I think I went at length in the broiler chicken show about how this is actually a setup that we teach in the education program. So anybody who took the education program is kind of like, well, that's actually what I just learned, and I should be bearish right now, not bullish. So it is what it is. If this is a bull, interesting how our counter trend rally there the other day came right back to the level that we need to see the market close above for us to actually get bullish, our good old bot entry level there. So just like Bitcoin, making lower highs and lower lows, good to see that we didn't make a lower low here today. But this is a bear. Moving averages are pointing down. Momentum indicators all pointing down. I didn't really see anything pointing up yet. Kind of sideways. Willie's not stupidly oversold yet, which is also a bit of concern. Usually Willie gets nice and oversold. See how it was nice and overbought here. Then we start getting things like RSI divs, and then we'll know that this thing's ready to go. And also don't really see a hell of a lot of new buyers. If anything, looks to me like, we got one high here, another high here, another high here. If I get a really low volume bar, that'll tell me that the bulls have fallen asleep. And the rally from 2 days ago was very, very low volume. So I get the distinct impression that the bulls have kind of fallen asleep here. And of course, I won't comment on Steward's names specifically. What I'll just simply say is what we got the smatterings of bottoms that were trying to come in here recently. And I was just kind of like, this feels a little too easy. It's a little too early. And as a result, a lot of the potential W's that we thought were going to come in, they just haven't materialized. And some of the W's that actually have tried to come in here recently are now actually spitting out new M's. So I would be very, very careful here, folks. Very careful. As I had said, obviously the whole market's going to pivot here off of tomorrow's inflation numbers. And hopefully, hope, we have some sort of really friendly inflation print tomorrow. And, we can get back to risk on. But for the time being, I'm not seeing it, folks. It sucks. I want to be a bull. I want to see you guys make tons of money. If anything, probably the little bit of uppy that we've seen recently here, I think was in a weird sort of way. We have a rule, at least I have a rule. I don't know whether anybody listens to me or not, but I have a rule that they always say, excuse my French, right? So we'll say it in French, right? The merde always rises last. So is what we just saw out of this GameStop, because keep in mind, when you actually look at the fundamentals of these names, it's You wonder why the public loses so much money in this silly game. I mean, all you got to do is you just got to see this. It's embarrassing how bad this is. The only problem is I don't know what screen I have. I think it's over here. Um, had this up, of course. I like to use FinViz as sort of my little fundamental screener. Stocks up 50 bucks, or excuse me, $20 on the day, 67% rally. And of course, as I said, I mean, I'm playing this through Solana, so this is almost like a double funny. Banged off another. This is a double of a 10x. So that's like a 20x profit book there. And this is a really good reason why you shouldn't sell everything. You know, there's some people that would look at this. Keep in mind, we bought way down here. There's some people that go 10x, man, sell it all, take profits. Well, hey, I just replicated another 10x at another double price. I don't know what the hell they're going to do to this, but you know, I mean, let's call a spade a spade. Is this thing at fundamental value? It's now trading 2,400 times current earnings. Keep in mind, a conservative PE is less than 10. 2,400 times. It's trading 11, almost 12 times the book value of the stock. The stock technically is worth $4.38 if you just add up all the pencils and erasers and cash registers and videos and video games and all that kind of crap that they have in their inventory, whatever, of which, interestingly enough, a huge portion of that is just purely cash. And that cash has got to go to servicing this debt. So it's not like they can just go spend that cash. They actually have a lot, you know, relatively speaking, a fair amount of debt, right? I mean, that's what, about 150 million dollars in debt that they have to service. So they better hold on to that cash to service the debt. So is there any fundamental value here whatsoever? I would unequivocally say no. This is all about meme stocks. One guy in particular who can move the market says something. I will agree, you know, on this W back here about a week or so ago, this thing was a pretty good looking little buy down at the bottom end of its range, probably, you know, trading at like maybe 2 times book, 3 times book, whatever. And maybe, I mean, I wouldn't even use PE ratios because this thing, you know, a lot of people are talking about it going off the board. But it just goes to show how the market can remain illogical far longer than anybody can remain solvent. I don't even really care why this is happening. All I care is making money from trading, right? I mean, that's my job, right? This is what I'm supposed to do here. So I have to force myself, and I just wanted to show you that before we end. I have to force myself to come in and buy when I see this thing all the way down at the bottom end of its range. Basic, and I did this through Solana. I could have done this through the stock market. It's the same thing. And then, you know, when the market affords me the opportunity, I got to pay myself for my hard work. And this is just what we do at TRI. In fact, I even posted this in our team room the other day. Look at, I don't know what's going on here, but this is just what I do. You know, I force myself to buy against the bottom ends of ranges. I don't take very big risks. So sometimes these names, they actually even go lower, right? So, but when the market affords me the opportunity to pay myself, I'm not buying into this insanity. I'm selling into this insanity. And that's what I do. Rinse and repeat. Next bus in 10 minutes. So I think I'll probably leave the free broadcast at that. Hopefully I did a relatively good job sort of updating you on what I see in the market. Obviously tomorrow, you know, tomorrow's daily brief is going to be very interesting. You might find that the whole damn market pivots right back up. You know, just finish off this image. Bitcoin is at an incredibly important pivot point here. And probably the best way to see this is on the futures. Look at that image. Isn't that cool? So, you know, I was counseling people, try not to get too bullish. Let's at least see some sort of price action that, you know, kind of negates the lower highs and lower lows. We had a huge rally through the weekend. Then we wanted to see, because that was a V bottom, we wanted to see this tested. It actually broke to new lows. Then through the weekend and through my birthday, things kind of calmed down. Market jumped right back up to the previous top end of the range. This is a really good example of Can you have patience and discipline to wait for the counter trend rallies back into sort of things like trend lines resistance? And then, oh, gee whiz, what a surprise. Here come new M's. And we're working our way back down. We don't have a hell of a lot of upside trend line support here. We're kind of just sort of delicately walking our way down this down sloping trend line. And you notice, of course, that we have M structured out above it. Now the question is, do we M structure out below this trend line, implying that we've accepted down below? And you can see there is a hell of a fight going on at this level. I would almost say that, it's probably, there's no point in us even conjecturing who's going to win this battle. But I would just simply say is whatever that inflation print is tomorrow, and maybe give it an hour or so following that inflation report, we should have a pretty good idea of who's driving the bus here in the market for the next few days, maybe even a week or two going forward. So Darth Maul candle rules the day for Bitcoin. And we're at a place, believe it or not, that actually I would not be shocked if the bull actually stepped up and took control of this market again. And you'll know for certain that that's happened if we can get our butts back above this 63,000 level here. Okay, I think we'll leave it at that. Should be a very interesting inflation report tomorrow morning. Slow and steady wins the race. Pay yourself. The Baird always rises last. Is it a coincidence that this stuff is doing this right now? And are we getting ready for another big leg to the downside? I don't know. Only time will tell, but it should be a very interesting day tomorrow. Having said that, let's pop on over to the after party and hang out with Mr. Sjord and get an update on what he's seeing over there in Europe, development update for the site, and how his totally kick-ass, killer, awesome FA crypto portfolio is doing, and whether he's got any new names for us to consider. All right, have yourselves a great day. All the best, and bye for now.